On this episode of the Chris Elliott Real Estate Show, we're talking taxes with Chris Smith of RBI Services, and they're not as scary as you think.
Welcome to the Chris Elliott Real Estate Show, where we bring you insights into the local Central Virginia real estate market, go in depth to answer your real estate questions and concerns, and interview local figures and influencers in the greater Richmond area. And now, let's get to the latest episode with your host, Chris Elliott, and co-host, Maddie Ray.
All right, welcome to the podcast, Chris. On today's podcast, we have Mr. Chris Smith of RBI Business and Insurance Services. Did I get that correctly?
RBI Services. Yeah.
RBI Services. Okay. Chris is an accountant, and we're going to be talking about some fun things regarding taxes and real estate and taxes. Before we jump into the meat of the show, Chris, tell me a little bit about your background. How did you become an accountant? Where did this all start? Were you just with a little, what is that thing called where you move the beads on the...
the abacus?
Yeah, were you just like 3 years old with an abacus?
We graduated from abacuses to pen and paper by the time I was born. I always found myself pretty decent math in school. I actually thought about being a math teacher. Then I figured out, unfortunately, teachers don't make any money. And
shout out to all of our teachers.
Yes. What you guys do for the pay you get baffles me.
Yeah.
So tried to find something that I could do without that I could use math and not
make a little bit more money.
Not be poor my entire life. So accounting came to mind and took a couple of accounting courses, did pretty good in it, and that started. I was then a corporate accountant for 20 years almost.
Oh, wow.
Made up to a division controller of a food packaging division.
And by controller, you mean controller of the money.
I was second in command for the finance group. Yeah.
Oh, wow.
And then decided that I wanted some more family time and had always sort of wanted to do my own thing. So now I started that about 6 years ago and still going strong.
That's awesome, man. So are you from the greater Richmond area originally?
No, actually I moved here in about a little over 20 years ago. I moved here in 1997 with what is now Genworth.
Okay.
It was a few names ago, but that's how I got here from Seattle. I grew up in Seattle and graduated from University of Washington. Go Huskies.
You played a little ball at the University of Washington, right?
Not at the University of Washington. No, that's a little too big time for me. But okay. I did play a little ball early on in life.
You were like a cornerback, from what I understand.
Yeah, cornerback. Yeah, sure. Cornerback that always found a way to the line somehow. But yeah, no, I was always a lineman.
Okay, yeah. And if you guys have watched the previous episodes, we're trying to see how big of people we can fit into this little podcast studio.
Yeah, this is interesting when you're 6'2" and this is fun getting back into the corner here.
Yeah, absolutely. Yeah, we legitimately have you back into a corner. So anyway, so you went to school, you studied, you went the corporate route. You found out that if you're going to be making the big bucks in the corporate arena, they typically want to own your life.
They pretty much own your life. Yeah. And we were doing refinances of our debt every 6 weeks, and that meant some very long hours every 6 weeks trying to get the refinance packages out to the bond holders and to the banks. So yeah, it became a little too much for my family. I wasn't seeing my daughter grow up.
Good deal. So give us a snapshot. What does RBI Services look like today? What do you guys do? And we'll jump in the
we sort of have two sides to us. The business services, which is my side. We do accounting for small businesses. We do payroll services. We do tax planning, tax preparation, and we do some fractional HR services.
Nice. Okay.
And then on the I side, my business partners take care of insurance for home, auto, and commercial insurances, and a little bit of life insurance.
Cool. Well, I'll tell you, Chris, the reason we wanted to have you on the show today is to really jump into some matters as far as tax and real estate, hopefully bring some value to our listener base so they can better understand. Because I feel like when you start talking about real estate and taxes, it's one of those things where
it gets confusing fast. There's been a lot of changes over the last 10 years in the tax rules with regards to real estate.
All right, so we had a little intermission there for some technical difficulties, but we're back on track here. So let's jump into the meat of the show. I'm going to tee you up with an easy one first. Are the proceeds of a home sale subject to capital gains tax?
Yeah, you would.
And you cannot answer every question with "it depends," which is a classic accountant.
I'll just use it depends one time, and this will be the one time it sort of depends.
I'll just kidding.
Unfortunately, like everything in the tax world, it does depend.
Yeah.
The rule is you can take an exemption from capital gains once every 5 years. So that's the first part of the rule. So if you haven't sold a house in the previous 5 years, check the box. You're good to go on that one.
Okay.
The next one was that house your primary residence in 2 of those last 5 years?
So you have to have be your primary residence
for 2 years out of the last 5.
And to qualify it and we're getting in the weeds here, but I like this stuff. To qualify as a primary residence, so I understand you have to live there.
You have to live there a majority of the time, 181 days.
So just 1 day north of 6 months.
Yeah.
So you could technically have a home in Florida if you spend at least 181 days a year there.
It can be considered your primary residence.
Nice. Okay.
Yeah.
Not that I'm giving any tax advice.
But Florida doesn't have a state income tax, so
Yeah.
But yeah, as long as you meet both those requirements, then the proceeds of your house sale are exempt from the capital gains.
So let me repeat this back to you. So if you have not taken the capital gains exemption in one of the last 5 years, and it was your primary residence 2 of the last 5 years, do you have to qualify on both fronts?
Yeah, you have to have both boxes checked. Yes.
Okay, good deal. And then what are aren't there also some threshold limits?
There is some thresholds. It's now up to $250,000 for a single person, $500,000 for a married couple.
So if you're selling it for $250,000 more than
pure gain.
And there's also cost basis and all those.
Yeah, exactly.
Fun
so just selling it for $250 isn't going to raise a red flag because you may have paid $225 for the house. So you actually only have $25,000 of gain there.
Right.
So it depends on the pure gain between what you buy it for and what you sold it for. In simple math, is going to be where you want to keep that $250,000 or $500,000 limit.
Good deal. Yeah. So just to summarize, and I'm probably beating a dead horse, but we get this question a lot. So if you bought a house and you are selling it for less than as a single person, if you're selling it for less than $250,000 of gain than you bought it for, then that money is tax exempt.
As long as you meet the 2 boxes.
You check those 2 boxes. And then if you're a married couple, if that number is under 500,000. So in Central Virginia, I mean, I would assume this is more applicable in places like California and South Florida, where you have these crazy markets.
California, New York, northern New Jersey, those markets are where you can have problems. Central Virginia, with our housing prices here, there's very often, I've only seen it one time where a person did not qualify for the exemption. And what's neat about the way the exemption does work, if you don't qualify for whatever reason, maybe you have lived in the house for 50 years, is at least the first $250,000 or the first $500,000 is exempt. So if you have maybe $525,000 gain, then you only have to pay gain on $25,000. So the first $500,000 or the first $250,000 is exempt no matter what.
Yeah. And for all the listeners out there, if you're clearing $250,000 from your house sale, if you're clearing
Chris would like to meet you right away.
Well, quit your we don't want to hear it. Okay, pay your damn taxes. No. Okay. All right. So that was question number 1. Question number 2: we had one of these recently that we had a client. If I've treated a property as a rental, can I still take my proceeds tax free? Does that capital gains exemption still?
It can if you meet both the criteria. So if you buy the house and you lived there for 2 years, bought a house 5 years ago, you lived there for the first 2 years, and then said, you know what, I have a growing family, I need to go get a bigger house. So you come to Chris and say, instead of a 3-bedroom, I need a 4-bedroom or a 5-bedroom. Move into the 5-bedroom house, but you keep the 3-bedroom as a rental.
Great way to build wealth.
Exactly. If you meet the 2 criteria, the 2 and 5 criteria, and you sell that house, yes, there is a good portion of the capital gains that can be exempt. There will be some depreciation recapture, but now we're getting into really deep weeds. But for the most part, yes, some of the capital gains will be exempt if you meet that 5-year and that 2-year criteria.
Okay. So I would imagine if you're out there and you're somebody that's thinking about this, like I was thinking about this for our personal house that's keeping as a rental, probably a good idea to talk to an accountant.
Give your accountant a call.
But before you do it.
Before you go off and do anything, give your accountant a call and say, hey, here's what I want to do. What are my problems? And go from there. I mean, unfortunately, tax law does change from time to time, and this is always an area that constantly Congress tweaks, so it can change ever so often.
I would imagine, though, it makes your job infinitely easier if you get the phone call before they do it versus, hey, Chris, I've already done this.
Yeah, if you've already done this, yeah, well, good luck, and you're going to pay a chunk of that to the U.S. government. Yeah, so put some in savings.
Let me tell you what your bill is going to be.
Yeah.
Okay, good deal. All right, so another question we got. When doing their federal and state tax returns, what deductions should people be thinking about with regard to their personal homes and or other properties we home? Maybe we could chop that up as far as let's talk personal homes, and if we get to it, we can talk rental homes as well.
Yeah, it's with the tax reform that happened in 2018, it's very different now than it used to be. There used to be some more things that you could deduct. It's going to boil down to two major things with real estate. One is property taxes, and the second is your mortgage interest. Mm-hmm. Those are going to be the two things. If you have mortgage insurance, there is sometimes a deduction. Depends on what you make in your salary. But for everybody, it's mortgage interest and your property taxes. Now, you also have a new criteria of the standard deduction being raised up that you have to meet as well. So, yes, those are eligible to be deductions, but it's not a guarantee like it pretty much used to be. The stats that have come out after 2018's taxes, most people went from about 30% of America went from being able to itemize down to less than 5% were itemized last year.
So it's pretty much is that standard deduction?
Yeah, standard deduction for most people nowadays because it got raised so high, especially in Central Virginia. Our house prices just don't mandate that type of mortgage.
Yeah. Now, what if somebody's got a home-based business or they work out of the home? Can they
actually
claim it
that all went away?
Wow.
Yeah,
really?
That was all part of what was called miscellaneous deductions, and that whole section of the tax return simply went away after 2018.
Really? Okay. Good
That
deal.
was actually something that affected me last year because I was still working with as a contractor.
Yeah.
And that affected me. It's big time.
It was a big change, and nobody really realized that they snuck in there.
So that's how they put money back on the bottom line as they got rid of that home office deduction to a degree.
Yeah, they took away some deductibility of anything, basically any expenses that you paid on your own for work, job-related expenses. That whole section got eliminated.
Really?
So it really hurt a lot of outside salespeople that used to pay for their lunches, pay for their own car, had mileage, deductions, union dues for blue-collar folks, tools for blue-collar work jobs. That whole section completely went away.
Wow. And that was long-standing tax code, wasn't it?
It'd been around 10, 15 years, that section, yeah. So it changed a lot of people. There was a lot of education that had to go on during our meetings with taxpayers last year, and there was some more contentious meetings than usual.
Some high volume conversations.
Yeah, it's high volume.
Yeah, I'm sure that made your job easy. Okay, so are there any expenses then? With that being said, in the standard deduction, are there any expenses related to people's homes that they should be keeping track of?
You want to keep track of any big improvements. So you put in new patio, you put in a pool,
kitchen renovation.
If you put in a pool, call us. We'll come over and help you break in the pool.
Yeah.
But kitchen, any renovation, bathroom, kitchen renovations, big major expenses. That's defined as anything over $5,000 at one time or one project by the government.
Yeah.
You want to keep those for lifetime because that will help with that capital exemption. So those things get added to what's called basis. And
I understand your cost basis.
The cost basis, they get added to that cost basis, so you narrow the gap of potentially having capital gains.
So let me let me make sure I understand this. Let me break this down for us mortals. So if I understand that correctly, you buy a house for $300,000. You sell it for, let's just say you're a married couple. You buy a house for $400,000. You sell it for $1 million. So now you're above that $500,000 threshold. You got $100,000 in that example that'd be subject to capital gains. But if over that time you put in a $30,000 kitchen renovation, a $50,000 backyard project, or whatever, and your improvements or your repairs exceeded that you had $100,000 or more of that, your cost basis goes from 400 to 500, and then you're potentially exempt for any capital gains.
Yeah, you can come do taxes for me. You're hired.
Okay,
yeah, that's exactly right.
I wouldn't want to do it, but so
we wouldn't. Yeah, you'd have to take cut and pay.
Yeah. Well, it'd be a little dry. So.
Yeah, exactly.
Yeah. So for our listeners out there, if you're doing, not that it necessarily. We don't think it would ever become relevant just because we don't see the crazy appreciation in our market that we do in other areas. But if you're doing major projects, save those receipts, upload them to the drive somewhere, upload them to the cloud, save them in a file folder, just because if, God forbid, the tax law ever did change, you'd want to have that.
Be prepared. Yeah.
Yeah, absolutely. Absolutely. Okay. Is there anything else people should be thinking about with regard to their real estate and taxes?
If with rental property, we sort of skipped over that earlier. With rental property, the rules are totally different. Any expense that you have to keep that rental property up and going, whether that be mortgage interest, having a cleaning service, utilities, the HOA, any expense with that rental property, you want to keep that and give that to your accountant for tax prep, because that will help lower your taxable income on that property. You do get credit for all those expenses if it's a rental property, if you're collecting fair market rent. But yeah, that's really, they've narrowed down a lot of the loopholes that used to be there with real estate.
So if you have rental property, would it be a good idea to maybe have a separate bank account or a separate credit card to keep track and know that all those things are actually...
If you can withstand that from a cash flow perspective and have the means to keep that discipline, that's an excellent idea, because especially with a lot of the credit card companies, they give you that summary report at the end of the year, and you can use that as a means to help prepare your taxes.
Do we need to save receipts, Chris?
Technically, yes. Any receipt above $75 you would have to keep if an audit ever took place. So you
off the record though, and I'm not gonna tell anybody. I mean, we're recording this, but how often do they ask for receipts?
If you're in an audit, that'll be the first thing they ask for.
Yeah. Okay. So it's probably a good idea.
It is a good idea. Now, the problem is most receipts that you get at places like Home Depot, Lowe's, they're written on thermal paper with thermal ink.
Yeah.
And that ink can rub off in your pocket just on the way home. So definitely probably the better way, rather than putting them in an old-time shoebox, is scan them, save them to your computer, save them in the cloud, so that way it's preserved. Once you scan them and can produce them again, if they're saved off somewhere, you can throw away the original because it's gonna disappear on you anyway.
Yeah. Do you have any technology software recommendations or apps that you use or you've had other people use that are helpful?
Google Drive. It really, just keep it simple. There's no reason to go out and buy expensive things. Google Drive, the free versions of Dropbox.
Yeah.
Those are all excellent things to use for that.
It's crazy. You listen to podcasts of guys that run like multi-million-dollar businesses, and you ask them what systems they're using, and it's like Google Drive.
Oh yeah, keep it simple, stupid. Yep. The KISS principle is still the best way to run a business. Absolutely. All right. So just for fun, what is the craziest thing that you have ever seen somebody successfully or unsuccessfully deduct on their taxes? Probably successfly. Craziest thing is I'm going to take some notes on this one. Yeah, no, keep it out of what you do. Don't try this at home, kids. Yeah, don't try this at home. There is precedence though for females, especially in the entertainment industries, to write off medical expenses, shall we say? Yeah, improvement surgery, improvements or deprovements, being whatever you want to have.
Have you ever had a client that's done that?
My wife might hear this, so I'm going to plead the fifth.
Okay. All right. Good deal. We know that means a yes. Yeah. That's awesome.
Yeah, no, there is precedence for females in certain adult industries to take medical costs as a valid expense for their business.
Yeah. So anybody in the adult film industry, Chris is your accountant. I'm sure your wife will love to hear that.
Yeah, exactly.
All right, super cool. Well, I'll tell you now, Chris, we're going to transition to the fire round. This is where, so we've asked our Facebook and Instagram audiences before this podcast to hit us up with some quick questions. So we're going to run through 5 quick questions. Daniel's going to read them out to you.
Okay.
We're just going to do short answers real quick like.
All right, guys. So I am pulling up our questions now.
Thank you, Facebook and Instagram.
I will have those up for us momentarily. We had some pretty cool ones this week. So the first one I thought was really interesting, especially about real estate, is are there any repairs or renovations that I would make to my home that I can't write off, not for monetary reasons specifically?
Most repairs, like we talked about, have to be counted as a cost basis adjustment, so they can't be written off in just a year that you do them. If you own the house, it has to be kept for later for cost basis. If you have rental property and you make improvements to the rental property, those you do get to write off in the year that you do them up to $500,000.
Oh, sweet. I did not know that.
That's a pretty high threshold.
Yeah. Well, it's part of the Section 179, which those thresholds got raised in the last tax adjustment.
That's my favorite section of the tax code. 179.
179.
I read that to the kids at night.
All right, so
Poor
the next
children.
one, it's kind of related, but is getting a solar panel for my home a good investment, and is it tax deductible?
Ooh, that's a good one.
It is a good one, and it's very relevant in what's going on today. If you're going to do it for the most tax benefit, you got about 2 weeks left. The percentage that you can get back on your taxes changes this year. It was 30% in 2019. And it goes down to somewhere in the mid 20s. I don't have my books in front of me right now, but it does take a decrease in 2020. But solar panels, you do get a tax credit for those for clean energy.
But the credit's going down in 2020.
The credit is going down in 2020.
Do you see, out of curiosity, are you seeing a lot of clients that are getting those in Virginia?
I've had the call from I can remember 3 different people that I've gotten a call or email from about it here in the Central Virginia area.
We need to get a solar person on the podcast.
Absolutely.
Yeah. So cool.
All right, next one is if I get a letter from the Treasury Department, what do I do?
Ooh, I recently got one of those. Those are not fun.
Those are not fun. The first thing, open it.
It's good advice.
Do I have to?
Yeah, there are people that don't open them.
You can't just shred it and it goes away.
Don't shred it.
Yeah.
Open.
They're a persistent bunch.
Yeah, they are. Don't be scared. Be
a little scared.
You can be. I know Uncle Sam is a scary guy. There are different levels of audits. The very simplistic one is just receiving a letter and saying, "Hey, clarify this for us." You can get a letter saying, "We need more details on this particular deduction you took." But definitely, first thing is open it. And if you have an accountant that prepares your taxes, get with your accountant and have them help you respond to that letter, because they are a persistent bunch and they will go after your wages and put a lien against you. I've also a lot of times, I know this is rapid fire, but a lot of times those letters can sort of be a good thing. I've had many clients get a letter saying that, they forgot to report something. Well, when we go back and dig into it, yes, they forgot to report it. And guess what? They get a bigger refund because we've added that now to their tax return.
Take that, IRS.
Yeah, so those are always my fun ones when you actually say, get a letter saying you owe $5,000. And no, you owe me $1,000 more.
Yeah.
Those are fun.
Yeah.
Nice.
All right, so the next one is if someone calls and they say I have to pay my taxes right now, what do I do?
Hang up. The biggest thing is hang up. This is a scam that will come out every spring during tax time, And unfortunately, I don't know how many people fall for it, but it is one of the biggest scams there is. The U.S. Treasury, IRS will never, ever call you first.
And they don't have accents most of the time.
Yeah, they don't have, they do have accents, but it's usually from New York or Philadelphia.
Yeah.
Jokingly. But no, seriously, folks, do not ever try to pay your taxes from giving someone your bank account over the phone. The U.S. Treasury doesn't act that way. They don't do that. They've never done it. They won't ever do it. They'll always send a letter first. They will send letter after letter after letter. Then they'll move to certified letters. And before they start demanding payment, you've had more than enough chances to respond to a letter. So don't ever fall for someone calling you.
You're not supposed to pay them in Target gift cards?
Target, Amazon gift cards, no, don't do that. Okay. I actually answered one of the scams a year or so ago. I just wanted to mess with someone on the phone. And so I said, what was your badge number again? Because they all have badge numbers. Well, the badge numbers for the IRS are really long numbers. They're 10 or 11 digits long. The person gave me a 6-digit number. I'm like, yeah, nice try.
Yeah.
Click.
All right. So the next question and final question is, where's the best place to get my taxes done?
Well, RBI Services is great, but there's many ways to do your taxes. You can try to do them yourself.
I'll pass.
I'm never a big proponent of that.
Optimal word try.
Yeah. There's a lot of things. TurboTax is a great program, and I know they sell a lot of copies of that software out there, but if you don't know what the question is really asking you, you can answer the question incorrectly. And if you answer it incorrectly, it can cost you money, literally. Yeah. There's H&R Blocks and Liberty Taxes in the Central Virginia area out there. My issue with those folks is they've maybe had training for a half-hour class or a 2-hour class. They're not going to know every piece of the tax code. And I'm not here saying I know every piece. I go through, but I do take 40 hours of continuing education every year to get prepared for tax season. So I have a little bit better idea than someone that's taken a half-hour class. So there's plenty of good accountants out there in the area. I would strongly suggest do some research and do some shopping, ask your friends and family, and get recommendations.
Yeah, guys. And I mean, at the end of the day, if you're trying to save $100 doing it the cheap,
it may not be worth it.
Well, it's probably going to end up costing you a couple thousand at the end of the day. So, don't be penny wise, pound foolish. So,
exactly.
So Chris, appreciate you being on the podcast, man. If somebody wants to reach out to you guys to talk about their taxes, to talk about insurance, to talk about business services, where can they find out more about you?
We are on the web. You can always Google RBI Services. We're located in Ashland, so make sure you pick the right one. And there's 2 RBIs in Ashland. One is RBI Services, which is us. RBI Corporation sells lawnmower parts, so they're not going to be too good at tax prep.
Are you sure?
And we don't sell lawnmower blades.
How good are you at fixing lawnmowers, Chris?
We have had people. We were in a bank building, in an office building, and we've had people bring in lawnmower blades asking us to fix them, and we're like, yeah, no.
That's awesome.
So we're on the web, RBI Services. Our office phone number is 804-677-9516, and feel free to give us a call. You can either get directed to the insurance side of the house or the business side of the house.
Awesome. Well, thank you for coming out, guys. That was episode number 15 with Chris Smith of RBI Services, and we look forward to seeing you in the next episode.
Thanks for joining us for the Chris Elliott Real Estate Show. If you have any questions or suggestions for future episodes, please contact Chris Elliott at chris@chriselliottrealestate.com or by phone at 804-980-1898. And please join us again next time for the Chris Elliott Real Estate Show.